We sell houses, we buy houses for our clients, and we help with investments. Today's conversation is going to be focused on first-time home buyers. Right, so what we want to talk about in this conversation is who Breland Universe is as an organization, right? Why it's important to buy real estate, how to get started in the home buying process, right? What type of financing options are out there, type of programs are out there, and what next steps look like. And if you have any questions, unmute yourself and say, hey, Fitzgerald, I have a question. So, Breland Universe was founded by me in the early 2000s. I was in corporate America working for a Fortune 500 organization. And what I realized is, I'm not going to build generational wealth working for someone. So I decided to start my own real estate company. I have a master's degree from Arizona State University, an undergrad degree from Kentucky State. But my main focus these days is buying and selling real estate. So I call myself a real estate entrepreneur. Why do I do this? Because I want to assist my clients in buying and selling real estate. Once you guys get educated and begin to understand the importance of having assets and what assets can do for you, even your home, you'll be more inclined to think about ways to acquire more real estate. I help sellers get the highest and best offers on their property. And I try to educate my clients, helping them understand what the real estate climate is like, why it's important to have assets, real estate assets, and the benefits and what you can do with it. I just want to show you a quick stat, right? So on the left-hand side, there's a stat that talks about home ownership rates based on race and ethnicity. If you look at the numbers, right, you see a decline, right? You have Caucasians at the top, the Asian communities next. African Americans have been fluctuating, but now we're in fourth place. And the Latino population is slowly and continually increasing. But what I want you to really pay attention to is the ownership rates by region, right? The United States has had a consistent growth in home ownership over the years, right? But let's go to the South. There's a huge increase in home ownership. But if you go back to the ownership rates based off of race and ethnicity, there's been a decline. Right? We have to get to a point where we start owning real estate assets. Let's get started. Ways to purchase real estate, right? Why do you want to acquire real estate? It's an easy process, right? First, you gotta know your options. You have to qualify for a mortgage, then just get pre-approved. Once you get those three things checked off of your list, you can buy real estate in the US. The first thing you got to know is your options before you can go shopping. I want you to think about these things, right? How much of a mortgage payment can I afford to pay every month? Similar to your rent payment, right? The difference is when you have a mortgage and you pay a certain percentage back a month, you're acquiring equity in that property. It's like a little mini bank, right? Every month you put some money back in that bank account. And 4 or 5 years from now, you've acquired equity in the property. So you can actually do some things with that money. You can get a home equity loan, right? You can sell the property and the difference that equity, right, put in your pocket, purchase that second home. So you have options when you buy a house versus renting. Huge benefit, right? Then you have to know how much you're going to be comfortable with paying. When you get pre-approved for a mortgage, let's say you get pre-approved for $500,000. Yes, you have $500,000 to spend from a bank loan, you don't have to necessarily spend that if you find a house that's $450,000 and it's giving you all the things that you want on your checklist, right? So I want you to think about that, right? When you're qualifying for a house, it's okay not to spend all that money. You can if you want to, you don't have to, right? A couple other things you want to keep in mind when you're acquiring your first property is how much of a down payment do you have saved, right? How long do you see yourself living in that house? And what type of loan is out there that best suits you? Now we're going to get into the loan types. You have your traditional, conventional fixed rate mortgage. You have a bank account with Bank of America, Chase, Wells Fargo, Georgia Federal Credit Union. Those are all traditional mortgages that you're going to get, right? They have the conventional adjustable rate mortgage. All that means is it's going to be fixed for about 3 to 10 years, but then in that 3 to 10 year window, it switches to whatever the average mortgage rate is in that market at that time, right? So another one, mortgage is a good one, is 100% financing. So they give, if you have good credit, they give, some of these organizations give you 100% financing where you don't have to bring anything to the table. Then the final, with a few more options out there, the final option that's on this page is your government-backed VA loan. And all that says is that you have houses or mortgages that are insured by the federal government. Make sure that your house is livable, is functioning. If something happens to you on your job, they can ensure that the bank will get their money. Okay? If you have any questions, unmute yourself and say, hey, Victor, I have a question. Okay, so what goes into determining your mortgage? The credit score and your income. That's the main thing, right? But what does that mean? So in regard to your credit score affects how much of a down payment that you're going to bring to the table, what that interest rate is. If you get a mortgage and you don't pay 20% down on that mortgage, you're required by the bank to get what they call private mortgage insurance. And what the credit also does, it qualifies you for a specific type of loan. Next, what determines your actual mortgage? Your credit history, your income, your monthly expenses, and how much money you save in the bank for a down payment. Now, a term that I want you guys to get used to, debt to income ratio. There is a percentage that the bank looks at when they look at your debt to your income ratio. Whatever that percentage is, they look at a percentage. And they have a scale that they use based on the loan that they're going to give you. It says, hey, you need to be at 38%, 40% debt to income ratio, meaning you have a lot more money in your monthly offer that you bring in after you pay your rent, your car note, your insurance, your utilities, your food, your gas, buy the baby's clothes, paying for the cable, right? All of that is the debt that you acquire every month. And obviously the income is the money that you bring in. So what's left over is that ratio. And the bank say, okay, based on this ratio, we're gonna say Jack Johnson, right, is gonna be able to qualify for our mortgage because he's got enough money to spend to pay us back when we loan him that money. How we doing? Everybody doing good? No questions? Good. Okay, so then once you figure all that out, you get all your paperwork and stuff in, right? They give you what they call a pre-approval. What that does is that says, hey, Jack Johnson, you got good credit, right? You got good income. Your debt to income ratio is within our numbers. We'll give you house shopping, you can actually, it's like going to the mall, right? You have your bank account, you have money in your, you know how much money you have in your pocket. So when you go to the mall, you know how much money you can spend. That's what a pre-approval letter is, right? But what do you need to get a pre-approval? You have to bring in 2 years W-2, right? 2 years of your tax return. A bank statement is about 2 to 4 months long, right? Any recent up-to-date pay stub, like 30 to 60 days, right? And if those numbers don't necessarily fit, they'll give you a few more requirements to bring in, like your taxes over the past couple of years, or a letter from your job that says you've been promoted and you get a lot more income than you normally been getting. So there are things that they ask for if they need a little bit more paperwork to pre-approve. So once you've gotten all that done, you're qualified to buy a house, right? But before you get to that space where you actually have the keys, I want to give you some do's and don'ts, right? What you do want to do is keep financial records, right, of all your deposits going into your bank, right? You want to make sure your rent is paid on time. You want to stay current on all your credit cards. You don't want to change no jobs while you're in this process, right? But you also want to make sure that you have money to put into the side for down payment. And then you also want to stay in communication with your real estate agent and your mortgage loan officer. What you don't want to do, you don't want to take out any major loans or make any major purchases via credit or even the cash. All the cash that you have, you want to put that aside for that down payment. And one other thing, when you are moving into your new house, you don't want to use up all that money that you saved just to get into the house. You don't want to be in the house and not have no furniture, right? You want to be in a house and turn on the lights, right? So you want to have enough money saved up to where you have down payment money. But shoot, you want to throw a party. You want to, have a housewarming, right? You might want to get you a new bedroom set, right? A nice little outdoor kitchenette, or, you want to have enough money saved up, used for the down payment, but also have some other money set aside so that you're not, all that money doesn't just go to get that house. You want to have, you know how most folks are. When they buy something new, they want to have accessories, right? You want to accessorize. So have a little bit of extra so you can accessorize in your new house. What you also don't want to do, you don't want to apply for no more credit. You can do that after you get the house, right? You don't want to try to get a car loan while you're in the process trying to get a house. Be patient, right? Get that house, then get that extra credit card, then get that car loan. Get that house. You don't want to open up any more new credit cards. You don't want to transfer balances, right? And when it comes to paying off collections on your credit, talk to your mortgage lender for that. And you also don't want to change banks. Right, but those are all the major things that I tell my clients when it comes to them getting qualified as a first-time home buyer. I hope this has been helpful. No, but did you want to ask me a question?
No question.
Right, sweet. Sarah, you doing all right? Hope so. Okay, cool. So now, we talked about, what the qualifications are. Now let's get into the home financing options, right? Let's look at some of these things. Hold on, let me see if I got a question. Chat. What you got going on? Okay, good. Yay! All right, this is working, baby. I love it. Yeah, it's making it happen. Wait, so now, let's take a look at some of these financial options that are out here. Okay, let me go to this. Let's go to the top. So in Georgia, they have down payment assistance programs, right? Let's talk about a few of them. Genoa funds, they have funds out there, first of all, right? They have down payment assistance funds. One is called the Genoa, right? They give you up to 3.5% of the purchase price as a grant to buy the house, right? 3.5% over a 30-year loan. Some of these, well, yeah. So all that you're required to do is apply. And it has to be a FHA or a conventional loan that you're using. That's an interesting one. Invest Atlanta, I'm affiliated with Invest Atlanta as a real estate agent, right? So Invest Atlanta, that's a really good program. Tell you about this. What it does, it focuses on certain communities in the Atlanta area. Fine City is a community. The community of Pittsburgh, Oakland City. These are communities that are blighted or underserved, or what's the other word? Or need some investment. And so Invest Atlanta says, hey, Jack Johnson, you want to buy a property in Pittsburgh or Vine City or Oakland City? We're gonna give you some options. We're gonna give you some money, right? 3.5% as a grant, right? So that you can buy the house, and all you gotta bring to the table is $1,500. Now, what we're gonna require is take a home buyer education class. But once we give you that certification, you're good to go, right? There's some requirements that you gotta fit in order to be a part of it, but good program. I have a couple of clients right now within that process. One of the programs that's really nice that she's focused. I'm gonna get in her because she said she's gonna be on this Zoom tonight. But anyway, so one of the programs that's in Invest Atlanta is they give you that 3.5% down, and typically that's like $10 to $20,000. But what they also do is they give you a little extra money if you want to upgrade the property, right? You want to do kitchen, right? You want to do something to your bathroom. You want the shower and tub. You want the wood floors versus carpet. You want to repaint your daughter's bedroom pink or fuchsia. They give you that little extra money to do that. But the beauty of this program is that you don't have to pay that money back, right? You don't have to pay that money back. So that's a great program to be a part of. Invest Atlanta. Another one is the Georgia Dream. That's a real popular program out here. They give you up to $5,000. You have to use either FHA, VA, or USDA loan. This Georgia Dream is good for people who are what they call essential workers, your educators, your nurses, your police officers, healthcare providers. They give you up to $7,500 if you're a part of the essential workers. But if the standard program you want to utilize, we give you $5,000 for that. Gwinnett County is a county in Atlanta that's up north Atlanta. They're doing a lot of development there. That's a great place to live. Cost of living is not expensive. They have really good school system in Gwinnett County. And all you gotta bring to the table for this program is $1,000. So as you see, they have programs out there that can help you buy a house with little to no money down. Cobb County is doing the same thing. And there's a program out there called Within Reach. And they give you up to 6% down as a buyer of a home. And that's forgivable at the end of the day. So, this little deal, we got 9 minutes. All right, any questions? You good? All right, cool. Let's talk about it. So the other thing I wanted to cover is a couple of things that I say you need to think about when you are a first-time home buyer. Because some of us sometimes make mistakes when it comes to deciding on getting the house. Those might include, I don't know if you were this person, looking for a home before you're applying for a mortgage. I suggest you look for a home, right? You want to figure out what part of town you want to live in. Do you want a 2-story house or a ranch? You want a split level, right? Do you want a big old yard? Do you want to be in a community where you're close together? Do you want to be in Atlanta? Do you want to be in Peachtree City, right? I want you to think about the type of house that you want before you move, because it's important for you to start visualizing screen TV in the bedroom wall facing the west. Right? Picture yourself driving up to the garage and you got the garage door open and just press to connect to your car. Right? Picture yourself picking out the weeds or planting the side or cutting the grass the first couple of years in your house. Visualize that. You're not going to get there if you don't visualize it. So I believe in visualizing. You can figure out all that other stuff later on. But visualize that. Right? Second thing you want to do is don't want to do this. Let's talk to one lender. Listen, they have plenty of people loaning money out here, right? Yeah, you might have a bank account with Bank of America, but what has the Bank of America done for you lately? Right? You deposited money in that bank all the time, and then they have all these requirements for you when you want to get a credit card, when you want to get a car loan, when you want to get a mortgage, right? When you're looking at a bank, you interview the bank just like they're interviewing you. You gotta stand there just like they do. Right? If they're gonna allow you to have a bank account, they need to allow you. You need to allow them to give you a mortgage. Right? Or figure out how we're gonna work that out. Right? There's more than one way to skin a cat, as my grandmother used to say. So look at more than one lender. Right? They have lenders out there that are non-conventional. Right? They have credit unions. They have creative financing institutions. Right? They have homeowners who what they call seller finance. Right? All these are legal ways to own a house. Right? So think about dealing with more than one. Think about dealing with more than one lender, so you got options. Right? You have to keep these people on their toes. If they know you have more than one lender, guess what? They're going to try to swoon you, bring you in. Hey, Latoya, they're going to try to bring you in, right? Wine you and dine you to keep you as a customer, right? But you got to make sure that you do more than one because you don't want to be pigeonholed thinking that that's the only option because it's not. All right? Buying more of a house than you can afford. Yes, we talked about that earlier. You want to have enough money in your pocket so when you go to the mall, you know how much you can spend. Yes, but before you do that, you gotta visualize and see all the things that you want in that house, right? I want a Roman tub in my bedroom, my master bedroom, right? I want to have granite countertops and stainless steel appliances in my kitchen, right? I want you to think about and visualize those things. They're going to happen, right? You just have to visualize yourself doing it. Got 5 minutes left. But a couple of other points I want to focus on. Moving too fast. I don't believe in this one either. You can move as fast as you need to, as long as you have all your documents and paperwork in order. If you have everything you need in order, you can move fast to get to that house. Right now, the real estate market in Atlanta is white hot. What I mean by that is, you know how like you light a match and the fire is going? At the top of that match is white. You put your finger on that, it's gonna burn your finger. That's white hot. How hot the real estate market is here in Atlanta. So in this market, you gotta move fast. You wanna buy some houses? I have clients that are putting in offers, right? And they're getting their offers out there because you got like 5 more offers that are going into the process. So keep in mind, you wanna have a sense of urgency after you get pre-approved. And like I mentioned earlier, you don't wanna drain your savings account, right? To just get into the house. Have a little extra money, right? Throw a housewarming party and invite me as your realtor. I want to eat some soul food and party at your house after we've moved you in. Main thing, credit is king in America. Let's say that again. Credit is king in America. You got to have your credit together. Make sure that you're managing. If you don't know what your credit score is now, write this down. Go to myfico.com, register, log in. I don't know if it's free or not. Either way, find out what your credit score is. That's going to be your starting point. Know what your credit is at all times because you can't do anything unless you can't rent no house, right? You can't get no credit card with bad credit. You can't buy a house. You can't get approved for a mortgage. So you want to make sure your credit is tight. 7, that's not a big deal. Yeah, I want to talk about this. Yeah. So when you're deciding on a house, you don't want to get too emotional because it's all about the numbers, right? Take emotion. Now after you picked everything, yeah, be emotional with the size of the house, what color you want it, part of town you want to be in. Yes, you want to be excited about that. But when it comes down to the nitty gritty, you negotiate the price and all those other nooks and crannies, don't be emotional because it's business at the end of the day. And again, in today's real estate market, you don't have to use 20%. I just showed you programs that are gonna cut you a check to buy a house. All you gotta do is bring a couple $1,000, right? That's it. So the biggest thing is, I know everybody has a list of 85 to 300 things that they want in their house. That's what we're calling the unicorn, right? But keep in mind, it's like having a girlfriend. I'm single, but it's like having a girlfriend and being married. You gotta compromise, right? So if the house don't got a pool, but it's got everything else, then maybe eventually you can put a pool in there, right? So be able to be flexible when you're shopping. There are plenty of loan options out there, so don't think you gotta go to the bank that you're with now. You got options, right? And remember, there are going to be additional costs, right, to purchase your first home, right? Property taxes. If you don't put that 20% down, mortgage insurance, right? Homeowners insurance. You're gonna have to do repairs on the house. Now, if you're buying a house, you have to maintain that bad boy. When you have an apartment, you gotta worry about that. You call the super, right? When you're owning your own house, you the super. Right? Keep that in mind, right? And one other thing. Now, I'm not against this at all. I kind of like the fact that nowadays in this market, you can actually get what they call gifted money before you close. Let's say you and I are clients, right? You've been through your cruise. You found that house that you want. We're at the closing table, but you $1,500 short. You can call your girlfriend, call your sister, right? Call your mother or father and get a gift. So don't be knocked for not being seasoned in money. And all seasoned the money has been in the bank for a little while. The bank is saying, oh, okay, this money been in the bank for the past 2 months. They've been saving up to move and buy a house. So you have the ability to get that. Right? All I want you to be able to do is understand that you have options when you're buying real estate. So don't think that you don't. I'm not talking about that. So finally, before I close, I want to be able to answer any questions that y'all have. Anybody got any questions? All right, if there aren't any questions, what I want to be able to do is we're going to have this every